Double entry principle. Double entry principle. Asset of stock. Asset of stock. Asset of stock under double entry principle. Good evening, viewers. Welcome once again to Web Educate. In our today's episode, we are covering double entry principle with asset of stock. And present this small question, this little question. Asset of stock, like we've said much about asset of stock in our previous video. The question says, write up the following transactions in the record of Ayodele Limited. July 2022, on the 1st, started business with 500,000 naira cash. On the 5th, bought goods for cash, 200,000 naira. On the 7th, bought goods on credit, 250,000 naira from TK Joseph. On the 10th, sold goods on credit to M. John, 200,000 naira. On the 14th, returned goods to TK Joseph, 90,000 naira. On the 18th, goods returned to us by M. John, 100,000 naira. On the 24th, sold goods to Esther John on credit, 150,000 naira. On the 27th, paid TK Joseph account by cash, 160,000 naira. On the 28th, sold goods for cash, 120,000 naira. On the 31st, Esther John paid us her account in cash, 150,000 naira. So that is the question. I wrap up the question now to present the solution and some explanation. Double entry, as I've said, is an accounting system that involves entering of a transaction in two separate accounts with the same amount. One account is debited and one account is credited. A corresponding a debit entry must have its corresponding credit entry, and a credit entry must have its corresponding double entry. And this is the asset of stock, as we have said in our previous video, that asset of stocks involve some account as sales, purchases, return inward, return outward, carriage inward and carriage outward, cash account and bank account. So let me rub off the question to present the solution. Double entry is accounts that involve two separate accounts which record a transaction in two separate accounts with the same amount. One account debits and one account credit. With the same amount, two entry on a single transaction. So now I present the solution. Now, and that is the first question says started business with 200,000 naira, and the requirement is write up the following transactions in the record of Ayodele Limited. Let me divide the board into two. I divide the board into two. Then the first one says started business, and when you started business, that is a capital account. that involve capital account, and next cash account take much, and also let me put this on. Do you have bank there? There's no bank there, so let me take it one by one. Capital account. Capital account is started business. When you hear started business, that is a capital. You are introducing capital. So started business with 250,000 naira. So that means our capital account is increasing with 250,000 naira. 250,000 naira. What for? You see check or bank. See started business with cash. That is corresponding entry is what is cash account. And let me take this to the cash account. Take this to the cash account. That means the corresponding entry is what is there. That means this money is going to what? Into the cash. Cash is receiving the amount of the same amount. And that is corresponding entry is what is capital account. Cash account. Capital account, cash account. There is no space. It's supposed to be here. This account is supposed to be here, but there's no space. And A/C is a short form of account. Short form of account. Next, see, bought goods for cash, 200,000 naira. Bought goods for cash. That means bought goods for cash, 200,000 naira. That means we use money. That means money goes out of what? Goods. Whenever you hear bought goods, that is what? That is asset of stock. That is purchases. And sales. When you bought, that is purchases. Let me purchases here, because that takes much. Purchases. And let me put sales here. And here sold goods. That is sales account. Sales account. And purchases account. Purchases account. Purchases account. Say this bought goods for cash, 200,000 naira. Bought goods for cash. That means cash goes out. We bought it with what? With cash. And that is purchase. When you hear bought goods, that is purchases. Purchases account. Purchases account is the corresponding entry. So purchases what is receiving. Purchases account is what is receiving. Is receiving. And that is a cash account is the corresponding entry. 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 Then next, bought goods on credit, 250,000 naira from TK Joseph. Bought goods on credit, 250,000 naira from TK Joseph. Bought, whenever you hear bought, that is purchases. Bought goods, not bought motor van, not bought building. So bought goods, and that is bought goods on credit from, that means purchase, how much? 250,000 naira. From TK Joseph. TK Joseph is corresponding entry. The space is so cash account 200,000 naira. TK Joseph 250,000 naira. You have to manage this space. TK Joseph. TK Joseph, and that is 250. That's 250. TK Joseph account. TK Joseph account. So look at it here. Debit purchases. See, the question says bought goods on credit from TK Joseph. Bought goods, purchases is receiving. Then bought goods from, then you have a TK Joseph account, corresponding entry. TK Joseph account. From TK, that means TK Joseph what is giving out. TK Joseph is giving out 250,000 naira. This is a Nigeria currency, naira. What's the corresponding entry? Purchases. Purchases account. Look at it. The same amount, double entry. The same amount. A single transaction that involves entry of what? Of double entry with the same amount. 250, 250. TK Joseph account, purchases account. Next, sold goods on credit to M. John. Sold goods on credit to M. John. Sold goods on credit to M. John. Sold goods, that's whenever I hear sold goods, that involves sales account. That is 200,000 naira. Sold good to M. John. Sold good to M. John, 200,000 naira. That is M. John account. So go to M. John on credit. So M. John account. M. John account. So M. John is receiving the same amount, 200,000 naira. And the corresponding entry here is what it says. Double entry principle, credit, debit, the same amount. A single transaction, the same amount. Different account, sales account, M. John account. On the 14th, return goods to TK Joseph. 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 How much? 90,000 naira. That means this involves return outward account. This is the space here is small. This is returns outward account. 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 Returns outward account is a return goods to TK Joseph. That is 90,000 naira here. TK Joseph. TK Joseph account. Where is TK Joseph? This is 90,000 naira. TK Joseph is receiving. The corresponding entry is returns outward. returns outward account. TK Joseph, look at double entry, the same amount. TK Joseph and return outward account. TK Joseph and return outward account. Next, on the 18th, goods returned to us by M. John. Where is M. John? M. John return. Whenever you hear goods that involve cash, is that cash or purchases? We sold goods to M. John. We sold goods to M. John and it's returning. It's returning. It's returning. So M. John, we credit M. John. M. John account is return inward. What is the amount there? We sold goods worth of 200,000 to him and returning goods worth of goods returned to us by M. John, 100,000 naira. 100,000 naira. Where is M. John? 100,000, and that is a return inward. Returns inward account. So where do you have return inwards? So I rub off. Let me rub off the capital account because capital account is just only one there. I rub off the capital account to put return inward there. I rub off the capital account to put inward there. Put return inward. Returns inward account. Returns inward account from M. John. M. John is returning back. How much is that? And that is a 100,000 naira. 100,000 naira from M. John. M. John account. Look at it. Double entry. 100,000, 100,000. Corresponding entry here is M. John. Corresponding entry here is what? Is a return inward. Return inward account. Next, goods returned to 24th. Sold goods to Esther John on credit. Sold goods to Esther John on credit. So I have to look for how I put the way I'm going to put sold goods. That is sold goods to Esther John on credit. How much is that? That is sales account. Sold goods to Esther John on credit. That is 150,000 naira. Esther John sales account 150,000 naira, and that is Esther John account. Esther John account. Esther John account. I rub off some space here to include Esther John account. TK account. TK account. Is there anything like TK account again? Is there anything like TK account? TK paid us in cash. Okay, let me short here. Let me just short here to put the Esther John account. Esther John account. You manage the space. Esther John account. So goes to Esther John, and that is a 150,000 naira. 150,000 naira Esther John, and the corresponding entry is what? Is sales account. Sales account, double entry, single transaction, double entry. 150, 150. The corresponding entry here is Esther John. This is Esther John. Corresponding entry here is a sales account. Sales account. Single entry, double, single transaction, double entry. Single transaction, double entry. Next, pay TK Joseph account by cash. Where is TK Joseph? Pay TK Joseph. We purchased it from TK Joseph 250,000 naira and return some goods. We are not paying his account. What is the balance? The balance is 60,000 naira. We bought 250 and returned 90, and the balance is what? Is 160,000 naira. 160,000 naira. And what is the corresponding entry here? Paid. That is paid by what? Paid cash. That is cash account. Cash account. 160,000 naira in cash. 160,000 naira in cash. That is cash is receiving. Sorry, cash is given out. We paid John, TK Joseph. So cash is given out 160,000 naira, and correspondent here is what? Is TK Joseph. TK Joseph, we manage the space. TK Joseph account. Look at the double entry, 160, the same amount, and there TK Joseph 160. Credit, debit, credit, debit, credit, debit, credit, debit, single transaction, double entry. Next, so goods for cash, 120,000 naira. That is sales. So good for cash, that is sales. What is that amount? 200,000 naira. So goods for cash, 120,000. 120,000. That is sales. And the correspondent here is what? Is cash. It's cash account. It's cash account. Correspondent here is a cash account. Then, and that is cash is receiving. So goods for cash, 120,000 naira. 120,000 naira. 120,000 naira. Single entry, single transaction, double entry. Corresponding entry here is what? Is sales. Sales account, 120. Single transaction, double entry. Cash here is what? Is the corresponding entry, that is cash account. Here, sales is corresponding entry of this 120. Look at it, sales account. The next is the last but not the least, Esther John paid us our account in cash. Paid us our account in cash. Where is Esther John? Where is Esther John? Esther John paid us. Esther John bought 150, goods worth 150 from us, and he paid us in cash. She paid us in cash. The corresponding entry here is cash. That means cash is receiving. We manage the space. Cash account 150,000 naira. We manage the space. Look at it. Double entry. Cash account. No. Esther John. We manage the space. Let me put E. John instead of Esther John for the space. Esther John, E. John, 150. And look at it. The corresponding entry is cash. The corresponding is Esther John. Double entry is single transaction. The same amount. And those are the entries. So we manage it like that. We manage it like that. That's the double entry. The space is not so much, but we manage it, and that is double entry. Asset of stocks. Set of stock, like I say, involve purchases account, sales account, return inward account, return outward account, cash account. There is a bank account, and also it involves a personal account also. The personal account here are what? TK Joseph and M John account. So that is a double entry principle for you that involve asset of stock. Asset of stock are the goods and services that the business is dealing with, and that is what involve a account like a sales account, like I've said, sales account, purchases account, return inward account, return outward account, cash and sales, and the cash and bank account, and the personal account. And that is a double entry. In case you have been enjoying some values here, you have been receiving some values, under the double entry principle asset of stock, do give us a thumb up by subscribing to subscribe to our channel by hitting the red button to enable us to provide more of this in the future. And as you do so, God bless you. See you in the next video. God bless you.